Celsius just dropped their earnings, and for any current Celsius investor or anyone looking to buy Celsius stock, there was a lot of exciting news. So I'm going to quickly go over what was said, go over their financials, and I'm going to compare them to the obvious competitor, Monster. I'm also going to explain exactly why I do believe Celsius stock is a buy. Let's get into it. All right, everyone. So I'm going to go over why I think you need to be buying Celsius stock right now. I'm going to quickly go over their current business, the future business, and compare them to Monster. If you can, quickly give me a like and subscribe. I really appreciate it. So let's go over their current business first. So right now, Celsius, the stock, right now, right, it's at 34. It went up about 4% when they released their earnings. It's down 4% in a year. 4% in 1 year, 17% in the last 6 months. So the stock is not doing well. It's actually down 64% in the last 717 days. As you can see, this top was around almost 100. That's not even the exact top, but it kind of double dip right there. But still, the current levels is down 64% in 717 days. But this is what they released. This is their key messages, right? So we have record Q1 2026 revenue, $782 million. So it was up 138% year over year, the revenue. And it was driven by the Alani Nu and Rockstar acquisitions. The portfolio share reached 20% of US tracked energy. So essentially for every 5 energy drinks, they accounted for 1 of them, right? And the Alani Nu integration is completed. That is big. So no more of these big distributor termination fees. Then the retail resets support additional space gains. This is big. Approximately 17% more of shelf space for Celsius and 100% more for Alani Nu. That's going to be huge. That's going to allow them to even grow faster than what they're already growing, right? And then the Rockstar net space maintained at what it is. But again, right here, right? 100% for Alani Nu, that's huge. So they have 21% of the energy drink market share, right about there. 99.5% weighted retail distribution. Basically, this is like when they put in 100 of their cans, they're going to sell 99.5 of them. That is really big. And they are the number 3 energy portfolio in the US, obviously energy drink. They are number 6 when it comes to just a beverage company, right? You have Coke, Pepsi, KDP, Monster, Red Bull, and there's Celsius. Pepsi, obviously, they have their deal with them as their for distribution, so that's really big. But as you can see, the contribution to Q1 2026 growth in the beverage, they had the second best. They grew 14% when Coca-Cola grew 22%. Right, so that's pretty big, and so Coca-Cola has a whole bunch of drinks. Celsius has Alani, Celsius, and Rockstar. Coke has a lot more, so they're catching up. They're growing at a really high pace. This is their income statement. I grade all income statement, not all income statements, but a lot of income statements of stocks that I watch. As you can see, revenue went up 138%. The cost of revenue went up 159%, which I didn't like. But other than that was the only reason why they didn't get an A+. Income from operations went up 167%. Net income went up 147%. And the EPS went up 120%. So all in all, it was a great income statement. This is also kind of very similar, same thing. Revenue up, you see 138, net income 148, adjusted diluted EPS was up 128. So great numbers, and it was only up 4%, right? And this is the non-GAAP. So if you take away some legal settlement costs and all that, and some more, the last of the termination from the distributors, you're basically looking at a 41 cents, right? Which is even better. But again, that's just what it is. So the future business, what are they looking to do in the future? So international is definitely a big one. That's one thing that they want to do. They want to start going into all these international markets, which is really good. They even announced that international represents a meaningful long-term growth opportunity, and we look to another step forward in the quarter with the launch of brand Celsius in Spain. So they are now releasing in Spain. As you can see, looking forward, right, the revenue estimates, they have it for 2026 growing at around 33%, then 2027 10%, and then 8, and in 2028 only 8%. So as you can see, these analysts, are estimating them to grow their revenue at a very slower rate than usual. And I'm going to go over how they usually grow their revenue. Same thing with the EPS, right? They expect them to grow the EPS at 488% this year, and then only 31%, and then 16%, right? It's kind of odd because when you look at their earnings history, other than this spot right here where they had a lot of the distribution, where they were going over to Pepsi and doing all that stuff, right? As you can see, they had a big hit to the revenue. But other than that, look at how fast they grow revenue. I mean, think when you jump up to, now next quarter is going to be the most interesting because now they are going to be comparing to 740, right? So yeah, it is different because they had Alani Nu. Yeah, it's not going to go up again 100% right away, right? It's not going to happen. But I do believe that they can grow pretty quickly, right? They can still grow at a fast rate, but you do have to understand they're not going to grow at these rates, the 100%, 80%, but they could grow at a 30% rate. They could. So that's what I put. I put a revenue growth of 30% and a net income growth of 40%. Usually you grow your bottom line better than your top line. So this is, doable for them to grow the revenue at 30%, their net income at 40%, and their EPS, this is what it would be. And this is a low PE for someone that's growing 30, 40%. You have the PE at 20 or 30, you're looking at the stock price at around 191, 120, at the low price, 127 in 2030. But 191, and that's a 54% per year compounded annual growth rate. So that is a really good number if they can stay at around 30% revenue growth and 40% net income growth. So let's go over Celsius and Monster. Obviously, Celsius and Monster, they are kind of like the big dogs in the energy drink space. So Celsius versus Monster, first of all, the market cap, Celsius is a smaller company by about 9 times, right? It's about 8.43 billion. Monster is 75.5 billion. So there is a big difference in how big the companies are. The income statements, the revenue, Celsius made about 2.5 billion. And then Monster 8.2 billion, so it was about 3 times more. The net income, right? Now this is just the net income straight off there was 17 times difference, but the actual net income available to the shareholders was 29, almost 30 times difference, right? So the profits, how much Celsius in profits, how much they're making, that's different. But this is also the trailing 12 months. Wait for next year. Those profits are going to go up a lot more. The valuation. Now, when you see, their PE for Celsius is only 22 and Monster is 34 for a company that's growing a lot faster. This should be higher. This should be higher than this just because it's growing faster. Now, I understand there's going to be some other stuff, right? Like that, the net income, right, was definitely off, but Celsius is growing way faster. So you'd assume that they would have a higher forward PE, but they definitely do not. The revenue growth is 85% for Celsius, and then even in the 5-year revenue growth, 80% compounded annual growth rate. Now, like I said, with Alani Nu being a part of the business and all that stuff, it's a lot. It did a big boost to the business in the last year, but I think it's just going to keep growing. I think there's going to be a point because when you look at how much money Monster makes, why can't Celsius get close somewhere around it, right? They're taking up a lot of share, and there's a lot of energy drinks that have to be drank, right? And the population of people just keeps growing. So I do believe that Celsius can continue to take up as much of that share and grow to a very similar revenue eventually, right? And so when you see this growth rate, they're growing pretty fast even at 5 years. The total cash, Celsius has around 400 million, Monster has 2.7 billion. So it's around 7 times difference. the total debt, Celsius has 695 million in debt. Monster has only 66 million. So Monster also has a lot less debt. So when you look at the long-term debt to the capital, we have, that's a big difference, right? These are the differences that will play in an investor's mind, right? And the cash flow is about 6 times difference. Celsius makes 360 million basically, and then Monster makes 2.1 billion. So these are just big differences that do play a factor, but again, Celsius is growing and they can get there. This is looking at the stock comparisons. Celsius is going to be the candles, right? The red and green. Monster is the blue. And as you can see, since Celsius went public, they are pretty even. They are very close to being even, right? Celsius is up 3,300%. Monster is up 2,900%, right? So very close. Right here, this is when they caught up, right? The big boom when they started making a lot more money. And they caught the eyes of investors. So let's look at 2018, right? Celsius destroying Monster since 2018, right? But that's because of how much they've grown since, how much revenue and everything they've gone up. But let's look at 2002 Monster, right? Monster's been public for a long time. Well, 2002, it went up 10,000%. Right? From 2002 to 2010, it went up 10,000%. Well, 2002 to 2010, that 10,000% means it ended at $4.29. Okay? Just remember this. 10,000% that Monster went up from 2002 to 2010, $4.29. From 2011 or so, 2012, all the way up till now, it's gone up another 2,000%. Which means it is now at $75. So, yeah, Celsius has a long ways to go. When you actually look at Celsius from 2018 to 2000 till now, and then Monster, those same years, 2002 to 2010, those 8 years, they look very similar. Look at this. I mean, they're almost identical. You don't even know who's who. You don't even know who's who. Which one's who, right? When we get here, this all looks almost the same. I mean, like, look at this. This looks identical. And this is where Monster ended at $4.30. It's very possible that Celsius has another run just like Monster did and go up another 2,000% from there. So anything can really happen. I had Google make up, I was like, oh, hey, do some Celsius investors being happy because the stock went up a bunch. And I mean, man, I think he's happy. These two guys got their eyes about to just pop out. And then we got Mr. I don't know, he's like a secret op for Monster or something. I don't know. It was a little strange. But anyway, thank you for watching. I really appreciate it. I tried to break it down as quickly as I could. Please give a like and subscribe. Yeah, I believe Celsius is a buy. I have my own personal portfolio, my private one, and then I also have my public one, which it's a heavy weighted part, but I love it because I do have high hopes and high belief in it. So yeah, thank you for watching. Again, always be aware and prepared so you're never scared when the market crashes. You'll just be able to buy that dip. And yeah, never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.